Hello, I'm James Preston and today I'm sitting down with Chief Investment Officer of Peak Investment Partners, Ian Wenham, who has recently returned from a fact-finding mission from China. Ian, you've always been a keen observer of Asia and China in particular. What's driven your interest in the region?
Well, James, I've been fortunate enough to live in Hong Kong for a number of years, beginning in 1995, and from a close range witnessing the transformation that's taken place in China particularly, and that progress continues today. Recently I was reading a report by the Brookings Institute which again highlighted how the Asian middle class remains in high growth mode, with their forecast of an additional 1 billion Asians entering middle class status between now and 2025. What's driving that is a high rate of income growth relative to the developed world. In the Asia Pacific region, we're seeing income growing at approximately 4% in real terms per annum, and that compares to a rate of growth of approximately 1% in much of the developed world. And so that income increase is really driving a major expansion in the level of consumption across the Asia Pacific region.
You recently attended the Goldman Sachs annual China conference in Shenzhen. What were the key takeaways?
I hadn't been to Shenzhen for more than a decade, and I was very surprised at the extent to which the technology sector particularly has developed in Shenzhen. It really reflected, underpinned, underlined the transition that we're seeing in China in the technology space. A number of companies presented, and what was clear is that they are all moving up the value add part of the food chain. We're seeing much greater integration into global companies such as Apple and Samsung Electronics by a number of technology companies operating in China and providing components to high-end products such as the smartphones. The second thing that stood out was that companies are spending a lot more money on research and development, and a number that we saw are spending between 5 and 15% of their revenues on research and development. The third thing that stood out was the number of patents that Chinese companies are now making. In 2015, Chinese companies lodged or applied for over 1 million new patents, and that compares to the US, which was around 580,000 patents in that one calendar year. It was the first time that any country has applied for more than 1 million patents. So what we're seeing is China really moving from that phase where it was engaged with almost copying products and goods from other countries to now protecting IP that they've themselves developed.
You talk of the new China. How does the new China contrast with old China?
Well, the old China was very much about building the hardware for the Chinese economy. So in other words, it was focusing on putting basic infrastructure in place and housing and new cities and rails and roads and infrastructure. And the consequence of that was that we saw the interest was really around steel, cement, the basic commodities and the basic manufacturing industries. The new China is very much around the innovation, development, technology. We're seeing a transition from the old industries to new industries, such as electronics. We're seeing a vast take-up of the internet, of things like e-commerce, e-finance. In other words, the new internet world that we're increasingly living in. And in the context of China, we've seen a rapid take-up in terms of internet connections, mobile particularly, to the extent that mobile internet connections have risen from something like 250 million in 2009 to 690 million today. So in other words, almost a trebling of the number of internet connections in the mobile space.
You allude to some profound changes underway in China. What do you think are the key drivers?
Well, I think the first is education. China is placing a substantial amount of emphasis on educating their people. It is a high commitment that all families make to getting their next generation properly educated. The key focus tends to be on maths, science, engineering, technology, and in fact some figures recently indicated that China has more graduates in that area than any other country in the world. The second is to do with the internet. I mentioned the rapid take-up of mobile internet particularly. That clearly has been a key feature in China. The third is to do with the fact that China has not had, for example, legacy industries such as retail banking, for example. Similarly with a lot of retail, the transition to e-commerce has been very straightforward across the mobile phones. The fourth is to do with the rapid development that we've seen around the big internet companies, where they've captured, in some cases, up to 600 or 800 million customers. I mean, these are big numbers. And those internet companies have been able to provide not just chat services or a limited number of services, but they cut across a whole range of different sectors, such as gaming, e-commerce, e-finance, and finally, as I said earlier, the government have been quite helpful in supporting a number of endeavours, and I mentioned the artificial intelligence as one example of that.
In your view, what are the key risks that might derail current trends?
I think the first is debt. The IMF recently came out with a report which highlighted the fact that China has seen a substantial build-up in its use of debt to support economic activity. In their view, that has got to a level which is at a point of representing some danger. It's probably important to note that debt, approximately half of it sits in state-owned enterprises, which at the end of the day are largely backed by the government. So to some extent that risk is somewhat mitigated. However, I do think that we do need to monitor that situation quite closely. The second issue, second risk, I suppose, is we're about to go through the Xi Jinping Congress that takes place in October. I think the expectation is that it will be pretty much steady state, that power has been sort of centralised, and it'll be a business as usual situation post that event, but nevertheless that is certainly in the Chinese political calendar a major event. The third one is perhaps a rather interesting one, which one of the big debates about that's going on is, as far as big data is concerned, the Chinese authorities have historically been the controllers of data, and with big data now on digitised networks, then that power that they have in accumulating and controlling and analysing all the data that's in the public domain, I think will become a bit of an issue. For those familiar with China, there was certainly a problem with Uber around the fact that the Chinese government decided that all Uber data belonged to the Chinese government as well as to Uber, and so I think any Western company operating in China is certainly confronted with a situation whereby any data that they do accumulate is possibly not just theirs, but it will be shared with the Chinese government. So from a commercial risk perspective, that clearly has got some problems ahead of it, I would have thought.
From an investment perspective, how are you positioning client portfolios to capitalise on the opportunities?
At the end of the day, I suppose we're taking the view that China at this point is very lightly included in global benchmarks. So from an equity investment and bond perspective, we would see substantial foreign investment over the next decade take place in both Chinese equities and bonds. So that's the first point I'd make. Sector-wise, I think we see the opportunities very much around the technology, the new China, if you like, opportunities that involve technology as well as e-finance, e-commerce, artificial intelligence, all to us looked like very attractive propositions from an investment perspective. At a stock level, we have been in a number of portfolios added Alibaba and Tencent over the last year or so, and they've done well. One of the things that came out of the Goldman's conference was Ping An, which is the major insurance company in China that's also actively involved in e-finance to an increasing extent, so that's a company that we're doing some work on. There's a number of smaller componentry companies that I was fortunate enough to visit that we may also we've put on the watch list to review going forward. And then the final area is really around Australian companies that are actively involved particularly around the food and consumer side in China. So companies like Treasury Wines, A2 Milk are just two names that have obviously managed to find ways of doing very good business in China. So that's another way of playing this evolving Chinese story.
Ian, thank you very much for sitting down with me and giving me a bit of an insight into China's new developments within the financial world.